a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about cannabis stocks and ETFs. So cannabis ETFs are among the best performing ETFs this year, and they have been surging since late last year. But if you look at the longer term performance, it's terrible. So we'll look at the reasons why they have been outperforming, and we'll take a look at 3 ETFs. So cannabis is currently, its recreational use is legal in 24 states and Washington, D.C. So more than half of the country has legalized the recreational use of marijuana, but it remains illegal on the federal level. So on being illegal on the federal level means these companies face heavy tax burdens, and also they cannot use banking channels. They do not have access to the regular financial system, so they have to operate mainly in cash. Then their shares, their stocks cannot trade on major US exchanges. They mostly trade over the counter or in Canada on much smaller Canadian exchanges. So late last year, these stocks surged after the Department of Health and Human Services asked the DEA to review the classification of cannabis. So currently, it is our Schedule 1 drug, where it is classified along with heroin and LSD. So in the new classification, it is recommended to be put in the same group as anabolic steroids, testosterone, and ketamine. So earlier this month, or in fact on January 12th, a group of 12 state attorneys general, they also sent a letter to the DEA encouraging the DEA to reclassify cannabis. They said it is in the interest of public health and safety. So in general, industry participants and users of cannabis and investors, they were very hopeful of a more rapid path to full federal legalization during the Biden administration. So when he was elected, before that, these stocks went up a lot. But unfortunately, not much progress has been made during this administration. And Safer Banking Act, which passed, which cleared the key Senate Banking Committee late last year, and we do not know whether it is finally going to pass and become a law. This act proposes to allow cannabis companies to use major financial and banking institutions. But again, its path remains very uncertain. So it remains to be seen whether this surge can continue. But there is an investment case for cannabis for investors who have a higher risk tolerance. And today we are looking at ETFs that invest mainly in US cannabis companies. And because most of these companies do not trade on exchanges, so they have to use SOPs, etc., to gain exposure to those US companies, including the so-called multi-state operators or MSOS. So US is a leader in the cannabis space, and some of the companies are the best and most innovative, but because of these regulations, they do not trade on exchanges. That is why gaining exposure to them is not easy, and these ETFs use swaps, etc., to gain that kind of exposure. So the ETFs that I'm highlighting all have exposure to these US cannabis companies, And since these would be the biggest beneficiaries of any reform, any reclassification, any tax change, or any access to banks, so that is why these ETFs have been doing well in particular. Other ETFs invest mostly in Canadian companies, etc. So this ETF, the first one that I'm highlighting by advisors, shares pure US Cannabis ETF, pure because it invests exclusively in US companies. The ticker symbol is MSOS, interesting ticker symbol, and actively managed. 83 basis points expense ratio, and largest in the space, 75 million in assets. To learn more, you can go to the code page on Zacks.com, read our research report, articles. I have done a podcast too on cannabis. You can listen to that podcast. Using the link, you can go to the web page, Advisor Shares web page for the CTF. You can look at the top holdings. You can listen to the manager's commentary. This is actively managed, and they have a lot of research and put out commentaries, so you can learn more about the ETF and the industry in general. So you will see that it has access to these companies through total return swaps, etc. You will see swaps on green thumb, Curaleaf, etc. The second ETF I'm highlighting is by ETF MG. So we can say that ETF MG was actually a pioneer in this space because they were the first one to launch a US listed cannabis ETF, ticker symbol MJ, which was actually converted from another ETF. But that was the very first ETF. So the second ETF, this one MJUS, this targets US companies, US cannabis companies, including MSOs. This is also actively managed. So all three ETFs are actively managed because they have to use swaps, etc. This has about 143 million in assets, an expense ratio of 75 basis points. And again, if you want to learn more, you can go to the code page and the web page, the ETF MG web page for this ETF. Look at the holdings, so you will see the same kind of holdings, a little bit more concentrated exposure in this ETF. The third one that I'm highlighting is the newest among these, and very small, just 4 million in assets. One of the cheapest in the space with 40 basis points expense ratio. And why I included this, because this has a very unique exposure. It provides hyper concentrated exposure to just 5 MSOs. So if you want the purest exposure to the US cannabis space, maybe take a look at this ETF, but be sure to use a limit order because this is a very small ETF. So trading costs could be high. That is why it is important to use limit orders. Again, you can go to the code page on Zacks.com, and using the link, you can go to this web page. They have some research. You can look at their research, etc. And as I mentioned, they have exposure, hyper concentrated exposure to these 5 MSOs using swaps, etc. On the next slide, I have the year-to-date performance of these ETFs. So among the top performing products this year, they are all up between 22 to 24%, 25% this year. Whereas the S&P 500 index is up just about 2%. But I also wanted to show this longer-term performance since the launch of Weed, the Roundhill product. So you will see that these 3 ETFs, they're all down about 55%. So the space is suitable only for high-risk investors who can tolerate high risk, and maybe just a small exposure to the space makes sense. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I'll see you next week.